are making the criteria for borrowing much more stringent than ever before.
Okay.
However, if somebody is qualified, if somebody has good payment, good credit history, and good income, the banks are very willing to give them the financing that they need for projects such as this. So it's very, very commonplace for people to consider this today, because they're also realizing that, or one of the things that I've always promoted to individuals is the marketplace right now is very, very competitive for those already renovated homes. What you can do by taking advantage of these type of programs is you can look in a less competitive marketplace at a less competitive home. You then can buy it with, again, less competition and renovate it or convert it to the type of home that you really want and do the finishings that you're happy with, not necessarily going in and bidding high prices on somebody else's renovations that perhaps aren't really up your alley.
Yes, makes a lot of sense.
So as long as you have a home that has the right bones, it's in the right neighborhood, it has all the features and bells and whistles that you're looking for, it just needs that extra new wave renovation. You can buy that home, again, in a less competitive marketplace perhaps, and finish it to your liking. It would be, and enhance the value all at the very same time.
Yeah, it's certainly what I tell clients. Everybody seems to want to buy the bright and shiny object out there. And so if it looks pretty and it is that bright and shiny object, the competition for that property is much higher
very much
than if they just buy that sort of diamond in the rough, because most people just don't have the vision to see the potential of what you can do with a house. I recently had a client where we walked into a fixer-upper, and luckily the next door neighbors happened to know my client, and so they invited us in to see their house. And of course, what was amazing was the next door neighbors had renovated the house amazingly. They'd done such a great job of it, but it really allowed my client to see the potential of everything that could be done with her fixer-upper. So it certainly really helped. And I'm not sure if it would have been such a slam dunk for her had she not seen what the next door neighbors had done with the exact same property.
Oh, no, you're absolutely right. There are a lot of people who, and listen, it's not everybody's skill set. Not everybody has the vision to be able to see what a house could potentially look like.
Mm-hmm.
You know, it would be a great idea for individuals to consider those diamonds in the rough and maybe have a contractor visit the homes with them. So everybody out there, befriend a contractor or find somebody that they can trust. And it could give everybody the opportunity when looking at a home to see things in a different light and see things the way that home would best suit their individual needs. Absolutely.
Yeah. Absolutely. I think it's definitely helpful. I've walked around a few times with an architect and property, and they're certainly able to point out quite a few things about potential things that clients can do that they just really hadn't thought about before. And it does make a difference, for sure. Is there anything else that you think people should know when it comes to either renovation financing, construction financing, or purchase plus improvements with the CMHC?
The biggest thing that I think people should take the time and investigate or discover on their own is, first of all, do they want to take on the scope of renovation on their own? The reason I say that is because I've had many clients whose process goes very, very smoothly. I have other individuals who have tried to take the project on themselves without hiring a general contractor or without hiring a well-reputed contractor.
Right.
And they've taken what should have been a 4 to 6 week project. It's taken them 6 to 8 months. And that's a problem, because in this type of finance world, you're paying for that financing with slightly higher priced financing in some cases while you're waiting to get the project completed. Mm-hmm. You want to get that project completed as fast as possible. And you want to be able to manage it as best as possible, knowing full well that you're not going to run out of money, that you're not going to run out of ideas, and nobody's going to be taking advantage of you. So you do need to manage it very, very carefully.
Yeah.
When it comes to the Purchase Plus Improvement Program, there are some limitations to the program that people need to be aware of right from the get-go. And we walk people through that all the time. Essentially, to make it very short and sweet here, an individual that's buying a home that wants to incorporate then Purchase Plus Improvements, they have to close on the purchase transaction on whatever date it was agreed upon. Then they have to finish the renovation. Then the bank will relinquish or release the money back to them. So they need to have a little bit of a float. They have to have a little bit of a buffer to allow them to get through that construction phase, because they're going to somehow have to pay for the renovation. There are some suggestions that I have that have helped out a great deal of people, and that is, again, find a contractor that you know and trust, somebody that has been highly recommended to you. You give them a good faith deposit to start the work. I can confirm for them that the money for the balance of the work is sitting in the trust account at the lawyer's office waiting to be paid to them once the work is done. So they're motivated to finish quickly. You still manage the money as the borrower, as the client. The contractor then, again, their motivation is to get in and get out of your home as quickly as possible, but you can make sure that they're doing the job properly because you're the one holding the money.
Right.
And everybody's happy at the end of the day. So you end up with a house that's renovated. Contractor ends up getting paid because the money was sitting there waiting for them, and they don't have to chase a client for 60, 90, and 120 days to get their contract paid. And everybody ends up walking out at quite further ahead. It's a beautiful thing. It's a great program.
Absolutely. Well, that sounds amazing. Now, what about flippers? Is that a market that you work with at all?
We certainly do. It's a different market, and the reason it's a different market is because those that are flipping, the banks are a little bit gun shy when it comes to people who are speculating on properties or buying to renovate to sell, because a bank does not want to get stuck holding a property that's midway through construction. So any bank that suspects that an individual will be buying or doing the acquisition, doing the renovation, and then turning around and flipping again, they will treat that as a true construction deal or construction financing, as I touched on earlier. And if so, those types of financing could be more expensive for a client. So as long as the buyer is aware of the costs and fees associated with that type of financing up front, and they can budget it into their flipping budget or their flipping forecast, then it's not a bad thing. But the mistake that a lot of people make is that they try to get into a home, they try to take a mortgage at the best rate possible, so that way they're then able to do what they need to do, maintain the mortgage with lower payments while they're going through the construction. But then what they find is at the end of it, when they go to sell the property, they're now hit with a penalty to break a mortgage that they didn't realize was closed. So you have to be very, very careful, and it's always a good idea for the bank to be made fully aware of what you're intending to do, so then that way everybody knows what to expect and everybody can manage each other's expectations quite nicely.
Perfect. That sounds great. Thanks, Joe. Tell us about your own real estate.
You're welcome.
Do you own real estate? Do you live in whereabouts do you live?
Well, I certainly do own real estate. I have a couple of rental properties in the city. I have a country property outside of Orangeville just for lifestyle. We bought a country property 9 years ago, and we enjoy it very, very much. But we do have real estate in the city. I have a commercial building, and I also own property in Florida. And I've always been a property owner because I believed, I was taught very young that the only thing that's going to go up over time is going to be real estate. You never know what's happening in the stock market.
Right.
I don't like other people managing my money. So I've always owned real estate, and real estate is in most cases, it's a buy and hold proposition. You want to hold on to it because 10, 15, 20 years down the road, it's going to be paid for by somebody else, which is a beautiful thing. Or if it's not a rental property and you're buying vacation properties, as long as it serves that purpose for you and other people in your life can enjoy it as well, then that's not a bad investment either. So what I'm finding now, commercial real estate, I've enjoyed getting into.
Yeah.
And if I were to acquire another property right now, I think it would be another commercial space, just because commercial tenants are a little bit different than residential tenants.
Right.
So real estate is near and dear to my heart. And again, I'm in the mortgage business, so I know the numbers game of it, the numbers side of it. But real estate, again, you buy and hold, you'll do well. You buy and speculate and want to get in and flip and get out quickly, that's where the gamble lies.
Yes, I would agree wholeheartedly with that. I mean, I'm similar. I'm a real estate investor. I own a number of properties as well. And I do believe in holding on to them for 10, 20, 30 years. You know, a lot of people talk about all this doom and gloom about, what happens if the market crashes? Well, I have a hard time believing $1 million house in Toronto is all of a sudden going to be worth $500,000. You know, certainly there can be a softening in the market, and, you know, maybe that $1 million house is worth $950,000, but 20 years, 10 years, 30 years from now, it's certainly going to be worth a lot more than it is today, which is why I feel, you know, very secure with my real estate investments versus being in the stock market, just like you. You know, I kind of feel like, well, I don't really control that stock market, but at least with a house, I can understand the systems of a house. It's bricks and mortar. It makes sense to me, you know?
And it can be tenanted, and it can, I mean, people do have a desire to pay their bills. So if you have a home that you're renting out, you might go through a lag time where you have to perhaps search for a new tenant, but you will most often be able to fill that void with the new tenant if in fact you lost your old one. So there is always that desire and that need for somewhere, for people to live somewhere. There's always going to be somebody to pay your rent. It's just a matter of how you manage that, what you go in expecting, because a lot of people don't go in accounting for shortfall. They don't go in accounting for a downturn in the market. They don't account for vacancy.
Right.
You may lose a tenant, absolutely no fault of yours or the tenant. Life gets in the way and something happens, so you have to go a couple of months while you're carrying a property while looking for a new tenant. But at the end of the day, like you said, in the long run, you'll always come out ahead.
Absolutely, makes 100% sense. Thank you so much, Joe, for chatting with me today. How can my listeners?
Oh, you're very welcome.
How can my listeners get in touch with you if they want to?
Best way to reach me is by email at Jow Sammut. So that's JOESAMMUT at mortgagegate.ca. So mortgagegate.ca, or by phone at 1-888-575-4403, extension 21.
Perfect. Can you just repeat your number one more time?
1-888-575-4403, extension 21.
Perfect. Awesome. Thank you so much, Joe, for chatting with us today. It's been awesome.
Develle, thanks for having me.
Very enlightening and hopefully very helpful to our listeners. Thanks again.
You've been listening to The Morrison Report. Hosted by Develle Morrison, sales representative for Bosley Real Estate Limited Brokerage, real estate investor and best-selling author, bringing you insights on the Toronto real estate market. Join us for another podcast.